Well, good morning or good afternoon to everyone, depending on what part of the country you are calling in from. My name is Ginger Bell, and I am here today to share with you information on the purchase power with FHA loans. Our call today is brought to you by Finance of America Mortgage Wholesale. Now, for some of you, you may have joined us before on a call. This might be a first time on a Zoom webinar. So I'm going to take a minute and go through some of the areas that you can use to access information as well as ask questions as we're going along. First of all, I have up here, you can listen either through your computer or you can call in, and the instructions are there. Your telephone will be muted. This is a very popular webinar, and we have several hundred that have registered for this. So we're excited to have all of you on the call. You will be able to ask questions today, but I can tell you I am not an underwriter, so I am not here to specifically answer direct questions regarding scenarios. But if you do have questions about the content, you can type them in a couple of different areas. You can either put them into the Q&A box that's up on the top of your screen, or you can put that in the chat box. And Terry's asking for the dial-in number. That is should be showing when you first log in or on your link from the email. So you can click on the information in the toolbar to the dial-in information. So Terry, hopefully that helps you out there. I see some of you raising your hand saying hello, I'm hoping. So as you're raising hands, I'm not going to be able to unmute everyone or anyone for that matter. So if you do have questions, two places you can type questions in. One is the Q&A box. One is the chat box. And in the chat box, you also will see I have posted a link there that gives you all of the information about today's webinar. So I have the slide deck that I'm going to be going through. I've also created some resources for you, which is an FHA Realtor PowerPoint presentation. And I've made this in an open format. It's a regular PowerPoint. You can go in, drop in your logos, your content information, and use this to go out and meet with realtors. I've also included an FHA homebuyer guide. Same thing, you can put your logo in there, put your information in there. I'm going to kind of go through that at the end of the webinar today. And then I've also put an FHA flyer in there, and it is just a Word document, super simple. You can go in there and customize that. So I want to check, I think you all can hear me because I know when I was testing my sound, some of you said you could, but I just want to have you do a shout out, let me know that that you can hear me, and I can move on with the rest of the webinar. So if you can just type either in the chat box or in the Q&A, let me know what part of the country you're calling in from. Thank you, Art, loud and clear. Excellent. I always like to know that the mic I'm using is working. So that is excellent. So calling in from across the country, that is fabulous. And I'm actually on the West Coast and enjoying some thunderstorms this morning, which is unusual for us in Oregon. So it's great to have all of you on the webinar today. This has been a series for us that we have been doing, kind of part of our Becoming Independent series, helping to support our independent mortgage originators to grow your business. So today we are focusing on purchase power with FHA loans. And next Tuesday, June 26th, I am doing a webinar on busting VA home loan misconceptions. And so you can register for both of those. Well, obviously you already registered for this one. You can register for the next webinar a couple of different places at independentoriginator.com or at famuevents.com. And so we want to thank all of you for joining in today. As I said, we do have links. I've created a lot of different resources for you, so you can access all of those. If you can't click on the chat box and access the information there, then I will be sending out follow-up information as well. You will get an email tomorrow sometime. It comes through the system, so I don't know exactly when it will be mailed out, but you can access it that way. And then I also am recording this. So if you had somebody that couldn't make it on the call and you want to forward the recording to, then you'll receive a link to listen to me all over again. And we will be making all material available in the FAMU site. If you're not using FAMU, then talk to your Finance of America wholesale account executive and get registered today, because we have a ton of resources available. So with that, I'll do a quick introduction of myself. Many of you know me. My name's Ginger Bell. I'm an education specialist. My company's Go-To Training. I work with Finance of America to be able to help to provide training and education, a lot of different resources for those of you who are independent originators. I've been lucky enough to co-author 2 books actually with Brian Tracy. My last one, Success Today, was 3 years ago. And I have coming out in August, which I'm very excited about. I was asked to co-author a book with Jack Canfield. And so that will be coming out in August. I'm sure I will do something special for everyone who, regular participants, on that. And my chapter for that book with Jack Canfield is on edu marketing, which is something that I feel very strongly about, and being able to not only help to provide education resources for you, but give you the tools to be able to go out and build education and provide resources to your real estate partners and borrowers and communities that you serve. So I want to thank all of you for joining. Really, when I started putting the information together, I started thinking about what are the homebuyer concerns and what are the concerns that I'm hearing originators are having in being able to get, whether it's a first-time homebuyer or somebody who is maybe thinking about coming back to being a home owner. What are their common concerns? And first and foremost is, I need a large down payment to buy a home. Second is, my credit score is too low to qualifying for a loan. Also, just the whole pre-approval process, not understanding that, especially for a millennial market. J.D. Powers does a survey every year, and every year from the millennials that come out of that survey, over 70% of them say that the loan process wasn't explained to them. So a lot of it is just not understanding the approval process, what they can qualify for. Some of them think it's cheaper to rent than to pay for a mortgage. And then some are thinking, hey, prices have gone up. Maybe they're going to go down, so maybe I should wait for that. So those are kind of some misconceptions that are out there. And you've probably seen these and probably have some more. So if you have more to add to that, type it in the Q&A or the panel and let me know what those are as well. What are some of the things that you're hearing from your buyers, especially first-time homeowners, on what are their concerns in getting qualified? Rental rates, as we know, are continuing to increase. There's a lot of factors that go into that. Mostly it's lack of inventory. Living in the Pacific Northwest, our rental income, the rental rates are enormous, and it's definitely an area of concern for individuals. And here I have from Rent Cafe on what we're looking at as far as the rental rates increasing from January of 2007 to where we are in January of 2018. So we've seen a substantial increase in rental rates. The reality is that there are a lot of homeownership advantages. The first is stability. If you're talking to someone and they're, concerned about having that house payment, one of the things you can share with them is a fixed mortgage will not increase for the 15 to 30 years that they're locked in on that loan, whereas the area rents are continuing to increase. So if they really want to lock in where they're at right now, home ownership is one of the best ways to do that. Obviously, for those of us who've been in the industry for a long time, we know that home prices can go down. But if you're looking at the overall appreciation potential, and this is going all the way back to 1940, you're looking at, oh my gosh, could you imagine buying a house for $2,938? But, even into the 80s, which is when I bought my first house, and we bought our first house for $62,000. But average home price was $47,200 to where we are, over $119,000 in the 2000s. This is an index that we saw out of CNBC in 2017 that they reported. In your area, it's probably a lot more. And so those are the things, again, to share with your first-time home buyers about appreciation potential. Not guaranteeing anything is going to go up, but just looking at the long term, that statistically we have seen that historically to go up. So what is a good solution for that? FHA purchase is an excellent solution, especially for our first-time home buyers. And the FHA benefits that we have: a reduced down payment requirement. We have comparatively relaxed underwriting guidelines, and especially if that you're comparing that with a conventional loan. Interest rates that are similar to those of conventional loan programs. And I can tell you, Finance of America, the FHA pricing for FHA right now, and historically, are good. And so, if you haven't looked at FHA and you're not working with Finance of America, I would really encourage you to contact your account executive and to look at the advantages of the interest rates. Under FHA, you can also work with some down payment assistance programs. You want to check with your FAM account executive to determine those eligible programs, but I know that there's a lot out there. And so that's a great opportunity for someone to be able to access money that's available to them. And some of those are really great programs, especially if you work with some on a state level. So let's talk about an overview of FHA. Down payment, 3.5%. Is a big difference from what a lot of individuals think that they need, whether it's a 20% or a 10% down payment. All funds for the down payment can come from a gift, which is another great opportunity. So if they have someone that can help them out, and I know, especially for our millennial market, there are many parents out there that have been having their kids maybe living at home, and I've talked to many that are saying, yeah, we're charging them rent, but we're actually taking that money and putting it aside, so when they get ready to buy a home, we're giving it to them as a gift. So those are kind of things to have conversations with that may get somebody into a home that may not think that they would be eligible. The seller can also pay up to 6% towards all closing costs. Non-occupant co-borrowers are allowed, and that's with a true blended ratio. So again, if it's something that they can't qualify on their own, then there is an opportunity under FHA for them to be able to have a mom or a dad be a non-occupant co-borrower. There are no cash reserves that are required, and this is for 1 to 2 unit properties. And then also there's credit leniency. So BK is 2 years, foreclosures 3 years, short sale 3 years. So much easier guidelines than what may be under conforming. Now, under FHA, remember, is not a mortgage lender, but rather they're a mortgage insurer. And like other insurers, the FHA collects regular payments that are known as premiums, which funds the claims that it pays to lenders. So FHA mortgage insurance premiums are split into 2 parts. And the first is the upfront mortgage insurance premium. The second is the annual mortgage insurance premium. And just understanding this and being able to explain it, especially to our first-time homebuyers and what that means, is very important. So I have here a slide for your upfront mortgage insurance. So this is paid at the time of closing. It's equal to 1.75 of the loan amount. So this means that for every $100,000 in the loan size, the upfront mortgage insurance premium paid is $1,750. So most borrowers add their upfront MIP to their mortgage amount because it does not count against the loan to value. Again, another qualifying factor to look at and to be able to explain to them as they're looking at how much they can qualify for a home. For the MIP, or the mortgage insurance premium, this is annual MIP. It's collected in monthly payments, and this is calculated into the ratios. Your annual MIP rates vary based on the length of the loan, the amount that's borrowed, and the initial loan's LTV. So the FHA annual MIP premium is the premium that will be collected in the borrower's monthly payment. It is in addition to the upfront mortgage insurance premium. So here's just a guide as far as what the MIP is based on. 2 things: it's based on the term and it's based on the LTV. So when you look at your base loan amount, and I'm not going to go through this entire graph, you have access to the slide deck, so you can go and take a look at that. But you can see what that comes in at and what the duration is of that MIP. Now, when you're looking at FHA, it's also important to remember that there are 2 great FHA programs that are available, and that is the limited 203K and the full 203K. And we've been conducting some awesome renovation webinars. We just did an open mic this month, and I know we're planning one for July that we're going to go through how to calculate the mortgage worksheet. So these are other things to think about, especially if you have homes that maybe need some TLC or some care, that you might want to talk to, especially your real estate partners about, that this is a great option that's available. So with that, and I'm seeing you all ask some individual questions here. So I'm going to get to questions on the end of those that I can answer. And again, I remember I am not an underwriter. So some of these you may need to take to your FAM account executive. And I'm just seeing if there's anyone. Are non-occupant co-borrowers limited family members? What about fiancés? Julie's asking. So there are specific guidelines. And so I know if you're talking about fiancés, Julie, there are limited LTV requirements. So you'll want to get into the guidelines on that. So it depends on what that relationship is. And again, contact your family account executive because they can go through that as far as all of the guidelines. And moving on, let's talk about some more guidelines. First of all, FHA, primary residence only. So this is not for somebody that's doing a second home. This is not for somebody that's doing an investment property. 1 to 4 units. Now, this is where we get into, for those that may not have most stellar credit, FHA minimum credit score. This is under the FAM FHA Plus. It's not available on all products, but you want to check with your FAM account executive to find out what it is available on. But a 580 minimum credit score can really provide opportunities for those who have that less than stellar credit. FHA does also work with high balance loans. And under FHA, now it's limited to 1 FHA loan at a time. And so there are some exceptions, and I've seen these before that that are available. And you want to, again, talk to your family account executive, run through the scenario with them. But usually what we see as far as exceptions to have more than 1 FHA loan is if a borrower is relocating a reasonable distance away. So they would keep their existing home, they're relocating, so they're going to move into another home. That's going to be their primary residence. A family size increasing or decreasing. If perhaps they're going through a divorce, so they're vacating a jointly owned property. And then again, obviously that non-occupant co-borrower. So if they already have an FHA loan, they're going to be a non-occupant co-borrower. Obviously they'd have more than 1 FHA loan. So those are some of the things as far as the general guidelines. And then going through the credit score, I threw this up here, just your property types, your LTVs. Standard minimum score is 580, and also on the high balance is 580. So let's talk about loan amounts. FHA has maximum loan amounts, and so those are established. They're set by HUD. They do vary from county to county. So you could be in an area that in one county it's higher, and one county it's lower. So what I always recommend is go to the resource. And you can find that on this link. I threw that in there for you. It's sorted by county. So you just go in, put in the county, and then it'll tell you as far as what the loan limit is for that county. Let's talk about your mortgage calculation. So we're looking at 96.5% of the lesser of the sales price or the appraised value. That's the base loan amount. This does not include your upfront mortgage insurance premium. Borrower must have a minimum of 3.5% down payment. And again, it can be a gift. We're going to get into what that gift looks like in just a minute. The closing costs may not be used in the minimum 3.5% calculation. Seller concessions, maximum allowed is 6%. Now, on your FAM Resource Center, there is a purchase loan calculation worksheet that you can go through that can help you as far as determining the calculation. And again, check with your FAM account executive if you don't have access to this, to gain access to this. I always like having a little, hey, I insert my numbers here, and this is how much it's going to be. And so a great resource to be able to use. So Let's talk about down payments and let's look at gift funds. So, gift funds can be in any amount, so it can be part of it or it can be all of it. And acceptable sources of gift funds include direct family members, employers, nonprofit organizations, someone with a close relationship with the borrower. And again, you need to identify what that close relationship is. I know I teach a fair lending course, and an example I have in that fair lending course was file that came out of Bank of America many years ago that had to deal with a fiance. And this particular example was a same sex, and it was before, it was even before I think same sex was legal as far as marriage. And so they ended up being fined, Bank of America ended up being fined for not allowing that as a close relationship. So it's one of those things, have a conversation with your account executive, find out what that looks like. I do know that there can be some restrictions as far as what that LTV could be, so it might not be at the 96.5%, but it still may be worth looking at. So look at those kind of things. And that goes to the point as far as a non-occupant co-borrower as well. So we talked about some of the down payment assistance programs. There are government agencies that have programs that can provide for systems, access to money. Some of them don't even have to be repaid. So if you know of some DAP programs in your area, check with your family account executive. They can check the list to see if it is approved to use with Finance of America and FHA. Now, FHA has a very particular way of documenting the movement of gift funds. And so it's important when you're talking to your borrowers about the gift funds, some of the things that they need to think about as far as planning for seasoning or where it's coming from and putting together the gift letter and what that looks like. The acceptable donors we talked about, relative of the borrower, a fiance, or domestic partner. These are eligible for gift funds. The borrower's employer or a close friend with a documented and clearly defined interest in the borrower. So again, check with your FAM account executive on what that looks like. The one thing that cannot happen is the donor cannot have an interest in the party. So they need to be a separation from the party as far as the purchase. So let's talk about gift funds from an individual donor. There has to be acceptable source of liquid assets. It has to be an acceptable source of cash reserves, and large deposits must be verified. So same thing that you're looking at as far as seasoning for any kind of down payment, that's what they're looking for from the donor as well. The purpose of the gift documentation must be documented. There must be an indicated intent, verify the ability of the money, verify the transfer, and verify the receipt. The paper trail is very important, and this honestly is one of the most frequent errors that FHA cites lenders and brokers for upon audits. So you want to make sure that the gift funds are fully documented. And then all documentation must be obtained prior to closing. So let's talk about gift letter requirements. When you're, and that's a requirement, there's going to have to be a gift letter. It needs to list the amount of the gift. No repayment is required. So it's not a, hey, I'm going to loan you this money and you have to pay me back. It needs to specifically state in the gift letter that no repayment is required. It must indicate the recipient must be the borrower, the donor's relationship to the borrower, the subject property address, the donor account information for source of gift funds, and that includes the depository name, address, and account number, the donor's signature, as well as all borrower signatures, and it must be in the file before the loan is approved by the underwriter. So, it's one of those things as far as setting that up with your borrower ahead of time and setting the expectation, letting them know what the process is. And putting together a clean file so that everything is all in there. So if there are any questions that come up, you can prepare your borrower for that. Now, let's talk about seller contributions, and I'm seeing some of your questions come in regarding that, so hopefully we will address this. So FHA allows up to 6% seller contributions of the sales price. And what you want to look at is the contributions may not be used for more than 30 days of interest, overfunding of escrow account, cash, furniture, decorating allowances, including carpet, flooring, etc., moving costs, and appliances. So no portion of the seller assist can be used towards the borrower's 3.5% down payment. And I am seeing a couple questions come up on portions being used for the upfront MIP. Liz, I'm seeing that. I am not aware that that is something that seller concessions can be used for. So if someone is on the call, I know Garrett, you're on the call, so if you know that that can be used, if you can type that in there and let me know, hopefully we can answer that while we're on the call. If not, we'll notate that and get back with you on that question as well. And any questions that you're asking, guys, if I can't get back with you on it, I have a list of all the questions. We will send these over to all the account executives, and they can give you a call if you don't call them to find out what your answers are. So with that, I'm going to move on to what we have created as far as working with your realtors and creating an FHA purchase campaign. So how many of you are working right now with doing presentations on FHA for any kind of purchase presentations, whether they be first-time homebuyer sessions that you're doing or working with realtors and educating homebuyers or just educating realtors as a whole? So type in your chat box or your Q&A. Let me know if you are doing presentations right now with real estate agents on FHA programs. That's one of the best things to do as far as getting information out to real estate agents, is letting them know what is available. So I'm seeing some of you, yes, you are, and you've done them recently. That's fantastic. So those are the kind of things. It's all about educating and being able to provide resources, because sometimes in the session that I'm doing next week on VA misconceptions, that's another program that is completely underutilized because a lot of agents think that it takes too much to do or there are too many challenges with it. And so dispelling some of those conceptions are very important. So I'm seeing some of you are doing other programs, not FHA yet. Okay. Well, you're going to love what I'm going to share with you right now, because I've actually created a slide deck for you. So I'm providing you with a Realtor slide deck. It is not a deep dive into guidelines and things like that, because most real estate agents don't want to know, don't need to know about that. But it is an overlay as far as just getting it in their mind on what FHA can provide for some of their buyers. You can personalize this slide deck. I would recommend set up some meetings. You don't have to do big meetings, but you can even do one-on-ones, have a cup of coffee, set up a meeting. I have an originator that I work with in Oregon, and he sets up a monthly meeting at the food bank and opens it up to all real estate agents and says, bring in a can of food and we'll do a presentation and, provide you with some resources, just making you aware of some of the programs that are available. There truly is power in education, and it's what I call edu marketing. So it's using your expertise to be able to go out and market yourself and educate as the expert in your field. And so really, it's setting up whether you're doing Eventbrite to be able to handle the registrations. You could do a webinar like this. I mean, it's super simple to do a webinar, and it's just a matter of sending it out to your database. But these are the kind of things that you want to do to be able to stand out and differentiate yourself from what some of the other originators are doing. It's one of the power, too, about being an independent originator, whether you're a mortgage broker or a non-delegated correspondent. You are local, you are in your community. So these are the kind of things that helps to position you as that expert. We also have a variety of resources that are available. in the FAMU Resource Center, there's a ton of flyers in there that you can go in and personalize, and we're constantly adding new ones. If you do not have access to the Finance of America University, it's an online university. We have every single webinar we have done, we record, we put it in there. There's flyers available, there's FHA training, there's VA training. And so if you are not using that, I would definitely recommend using that as a resource. And we have our webinar coming up on June 26th, which is Busting VA Home Loan Misconceptions. You can register at Independent Originator or at FAMU Events. And then you can access all the links. I put those up in your chat box. And as I said, I am going to be sending out a follow-up email that's going to come out probably tomorrow afternoon. So if you can't access it on this, I'm going to send a follow-up. We'll also record this webinar. But grab those links. And what I'm going to do right now is show you what those look like. And I'm seeing some questions coming in. So I'm going to read through. Okay, so I'm seeing an answer on the upfront mortgage insurance. The seller may pay upfront MI, however, the entire fee must be paid. That's right. I remember now. Thank you. So seller contributions, if you're going to use the 6% to pay the upfront, it has to pay the entire fee. It cannot be paid partially. So thank you for that. And then I'm going to see a couple other questions that are coming in, see if I can answer those. Mention, of course, you're teaching next week. So that's the one, Ricky, that is on the 26th. You can go to FAMU Events and register for that. Jacqueline's asking, how long can a borrower need to hold FHA mortgage before they pay it off, either by selling or refinance? Is it 6 months or 12 months? So check with your account executive on that. Most of the time it is 6 months, but there may be some overlays there for 12 months depending on a couple of different factors. Yeah, I think it is. I'm seeing some of you post in 6 months, and I think it is 6 months, but I know sometimes there are some overlays too that take it a little longer than that. You are always at 6 months, I know that, as far as refinancing. And then a reminder for if you do not have access to FAMU and you're wanting access, you can get an access code from your account executive. And then I'm seeing one other thing. MIP is for the life of the loan. Okay, I'm seeing a couple other questions, and I'm not going to read through all of these here. So if I haven't answered your question, I apologize, but I do want to hop over and show you some of the gifts that I'm giving you. Okay, first of all, this is your, see if I can get it up here, purchase. So this is your Realtor presentation. So you can put your information in here. So drop your contact information in here. I've made a slide for you to put your beautiful photo in there and your contact information and your logo. Also remember to put your company NMLS ID number and your LO NMLS ID number and any disclosure information. I put the Equal Housing Opportunity logo up there because as independent mortgage brokers and non-delegated, that is the logo you should be using on everything you're doing. So I threw those in there for you so you don't have to look for it. And then I'm not going to go through the whole thing, but you can see some of the slides that I've used. You can talk about rental rate increasing. You can put some information in here for your local areas if you want to, why it's important, just a quick little overview, brief explanation of the insurance, what the general guidelines are, talking about gift funds, because this is what realtors get most excited about. And so giving them information on that, talking about what that looks like, seller contributions, and you can add in there, I didn't in this one, as far as the 6% can be used for the upfront MIP, but it has to be for all of it. And that obviously a closing slide as far as options, and then your final slide here. So there's a slide deck you can use. And then I've also created a home buyer's guide. Now this I created in PowerPoint, so you do need to have access to that. But again, you can put your company information in here. This is just a guide if you want to take it to open houses, or just as a drop by to give to real estate agents, or even with potential borrowers. You can show them this, and you can print it off. I've made it into an 8.5 by 11, so you should be able to print it and put your information in there. We talk about down payments, what you need to know in the mortgage process. This is actually from Freddie Mac. And then again, the final slide that has your information in there. And remember to insert your company licensing and disclosure information. So that includes states you're licensed in, your company license number, any other disclosures that you have there. And again, the Equal Housing Opportunity logo that I put there for you. So I've created that. You can use that. And then finally, this is a Word document, and it's a very simple flyer, but I know I get questions all the time about flyers, and you probably do too. You probably get, you know, agents that say, hey, you have a flyer you can bring. This is a great flyer for you to be able to use. You can, if you want to put their name in there too, you can throw your photo in there if you want to, but this is just an open source. But I wanted to give you something that you can just quickly go and use. And that's really the goal of what we're doing with these webinars, is to be able to provide you with resources to go out and start, educating, start your marketing, and be able to provide information to your real estate agents, to your borrowers, and to your community. So make sure and access the information. And I'm seeing not able to open the 2 PowerPoint links. So yes, so if you can't access the links on the panel, then I will be sending out an email tomorrow, and so you can access them as well there. So any other quick questions, and let me know, is this helpful to you all to be able to provide you with the slide decks? And oh, Julie, you're not seeing that? Okay, there you go. So there are the links, and you can just click on those in the chat box. You should be able to access them. And if you can't access them, I'm going to send you a follow-up email. But let me know, guys, if these are the kind of things, the resources that we're providing for you that are helpful for you, because we're planning on doing more of these in July. Our focus right now is on FHA and VA, and then our renovation under 203K. So those are the ones that we're focusing on through the summer. And then in the fall, we'll look about some other ideas. But let your account executive know, what are some of the resources that we can help you with. That's really our goal, is to be able to provide you with resources so that you can go out and do what you do best. And so I want to thank you for taking time out of your day to be on the webinar. Our goal is to provide you with information on programs that are available, and to be able to support you in being an independent originator. And I thank you for that, and for your commitment to bringing home ownership to your community. So I will see you all. If you're not registered for Tuesday, get registered for Tuesday. Hope you all have a great weekend, and I will see you all back on the call on Tuesday. So thank you so much.